Major funding for these programs is provided by grants from HSH Nordbank and First American Title Insurance Company of New York, Perfect Building Maintenance, Allied Partners, SJP Properties, Murray Hill Properties, Bank of America, GREENBERG TRAURIG, LLP. Additional funding is provided by grants from Arbor Realty Trust, Antares Investment Partners, Athena Group, BRT Realty Trust, Burden LLP, City Habitats, City Investment Fund, Cushman & Wakefield, Eastern Consolidated, Essex Capital Partners, Herbert J. Sims & Company, Herrick Feinstein LLP, Helmsley Spear, Jackson Development Group, James D. Kuhn Real Estate Institute at Syracuse University, Kilroy Metal Products, Massey Knackle Realty Services, M&T Bank, Meridian Capital Group, McSam Hotel Group, Newmark Knight Frank, Moinian Organization, Must Development, Palin Enterprises, Rosenthal & Rosenthal, Signature Bank, SIDNEY FETNER Associates, Sutphin Properties, Stonehenge Partners, Studley, Triangle Services, WITKOFF Group, Extreme Contracting and Deconstruction.
Hello, my name is Michael Stoller, host of the Stoller Report, Real Estate Trends in the Tri-State Region. Everybody likes hotels, and if the giants would have played in the Meadowlands, the hospitality industry would have done great because the Giants were so great. And you know, some of my guests wanted to bring their Giants uniform today to wear it marching on the parade. But we are talking about a very hot industry, and the hot industry in New York, like the flavor of the year, the flavor for the last 5 years, is hospitality. And to really bring it around, I have the kings of hospitality, including select service over here today. My guests today include Eric Lewis, Managing Director of Hospitality and Gaming, Cushman & Wakefield Evaluation Services, I got it correct. Tim Haskin, President of Peninsula Real Estate. Sean Hennessy, CEO of Lodging Advisors. And last but not least, the man who's selective service, Will Obeid of Gemini Real Estate. So, all you guys, these pillars of the community, I've known you so many years, what's happening? You're the veteran. You came from Tishman. What's happening in the New York hospitality?
Well, I think that there's a real disconnect right now between the capital market side and the actual hotel operating performance side. The operating performance side is still great. '07 was another record year. We've had 3 years in a row of double-digit RevPAR increases. Yep. This year, everyone that you talk to is still looking at a positive year on the operating side, with RevPAR increases of anywhere from 6 to 10%, depending on who you talk to.
It's not like Fox Business. Revenue par, you know, we have to go down to the consumer. You know, price per room, you know.
Okay. On the capital market side, we're in a very difficult environment with many of our Wall Street friends on the sideline. And
you mean on the unemployment line?
There's some of that. There's some of that too. But I think the general consensus is that the hotel demand is still very strong in New York City and will continue to be so in '08.
How many rooms do we have planned? Come on, guys, you know this market. You can.
Depending upon how many fall out of the pipeline, there's probably at least 8 or 9 that'll be built, 8,000 or 9,000 rooms. And if everything that was conceived ever got built, it'd be north of 15 probably.
On top of the 64,000 that's already in Manhattan right now.
But Manhattan, let's please, we're not, you know, we're in the 5 boroughs, we're in East Hampton, we're in Montauk, plus people watch us on the web, you know, it's not only Manhattan.
Right.
I mean, do you know anything more than Manhattan? I mean, you just tell me you like Manhattan, but I know Sean has done valuations on proposed W hotels on Flatbush Avenue in Brooklyn, proposed loft hotels in Long Island City. You've done appraisals on this. What about the other sections? We're talking about 8,000 rooms in Manhattan. What about the Brooklyn, the Bronx, Staten Island, Long Island, New Jersey? What's in the local area? I know you live in New Jersey, the two of you. What are we talking in total? Are we talking 20,000 rooms?
In those surrounding areas? No, I don't think there's that many in those areas, but people are looking at those surrounding close-in markets because the land's a little cheaper, the restrictions are a little looser, so it's easier to build. The trade-off is that you can't charge as much per room as you can charge in Manhattan, but to a large extent, you're paying the same amount for a maid that you would pay or a housekeeper that you would pay in Manhattan. So it creates a bit of a profit squeeze, but if you can get the land and the construction costs down close enough to make sense, it's encouraging people to look at those opportunities.
But now, who's going to those properties? I mean, in this situation, who are they, people, I think people come to hotels in New York. The business traveler is here Sunday night to Thursday on the average. That's the main business traveler, except for during holiday seasons. And then the weekend, I think the big joke was hotels were always slow on the weekend, and in Lower Manhattan, hotels were busier because of all the tourists over there. Right. Who's going to Long Island City? Who's going to Fort Lee, New Jersey? Who's going to the airport hotels?
I think by and large, it's the people who want to stay in Midtown Manhattan but can't find a room or can't afford a room and are being pushed out into these outer markets, Long Island City, Brooklyn, Jersey City, Fort Lee, Westchester County, Long Island. And just as the demand is being pushed out and causing the development of many of these hotels that we're seeing out there, if and when the slowdown happens and you have that contraction, those are the hotels that are going to feel it first.
Prior to the show, and now I hear this term, if and when the slowdown happens. Okay, we're not economists. Next week I'm having 4 leading economists to talk about the market. What do you see? Is there a slowdown? You're operating 2 great hotels yourself, the Beekman and the Eastgate, which you're going to reflag one of them. Has there been a slowdown in the last 5-6 weeks?
Not at all. In fact, our budgets for 2008 are up 6 to 8% for this year. We haven't seen any slowdown, but we're on the east side. There's been very little new development. And talking about Manhattan, when you look at all the rooms, I think you really have to, Manhattan is a large market, but it's a series of sub-markets. And I think you really have to go and analyze all the different sub-markets, whether it's Times Square, Chelsea, downtown. And when you really look at a lot of the full-service, higher-end hotels that are being developed in Manhattan, whether it's the Andaz on Wall Street or the W downtown or the Shangri-La in Midtown, or the new Hyatt Andaz on Fifth Avenue, or the One Hotel on 40th Street, all of those have a very large residential component. For sale, residential, or fractional in the case of the Andaz. And so what you're seeing is most of those hotels probably wouldn't have been developed on a pure standalone hotel basis.
That's the only way they can get the numbers to work.
Right.
They have to sell off the condo units for the sake of the hotel.
Right.
And what happens if the condo units don't sell? I mean, let's also look at the economy. We are in a time that jobs are being cut. The capital markets, which we all discussed, are slow. So, there are going to be layoffs over there. In superb locations, condos can sell anywhere. But 40th Street and Fifth Avenue is a nice location, but I'm not certain it's going to sell. 75 Wall Street, you got a lot of other property nearby in that neighborhood. You have a W Hotel, you have MOINIAN's, all these other hotels. These guys and you are all hotel operators or understand that business, and they look at the hospitality business as is. They don't look at the condo segment.
Well, Michael, we're not selling any condos in our select service hotels.
Come on, let's get to the truth. What is the difference between a select service and a limited service hotel? I call them limited service hotels. What's select service versus limited service? And tell my my audience where your limited service, select service, gem hotels are.
Well, select's the new limited. I'll put it that way.
I want that in your appraisals and reports.
We believe that the best risk-adjusted returns in the hospitality industry is in the 200 plus or minus key space in Manhattan. Strong flags, strong reservation system. We have Comfort Inn hotels. We have Howard Johnson hotels in Midtown West as well as Lower Manhattan.
Now, do you agree with him?
Well, there is a great logic to that, in that customers who want to stay in Manhattan generally have to pay a high price just to gain entry into town, even for some of the least level accommodations in the city. And at that point, they're paying probably about as much per square foot as any hotel guests in the city, until you get up to the super luxury level where the economies kind of take on a life of their own. So if you can get in at the right price, it's a very attractive operating model.
Well, and
run high margins.
And one thing that we think we've done pretty effectively over the last few years, we haven't had the appetite to take development risk in the hospitality sector. What we've done, I think, fairly effectively is execute forward purchase contracts. So we allow a developer to take the development risk. We've taken capital markets risk, which has gotten a lot riskier lately, but for the last few years, it's been a strategy that's paid off.
And for the last few years, the real estate lease-up risk has been pretty much nil for most of your properties, I would think.
Correct. Our select service hotels are running at 96% occupancy right now, so they're doing very strong.
Now, Howard Johnson, Comfort Inn, these are internationally known franchises. Right. Gem Hotel right now,
right.
It's not that. The
right.
Eastgate and the Beekman do not have franchises. How do people go to your hotels? I mean, we'll get back to the old days at Tishman, but
well, in the case of the Beekman's been a hotel for 50, 60 years, so it's a well-known hotel in Midtown East. It hasn't been renovated in many years, which we intend to do a major renovation starting very shortly. Our business, we get 25% of our business from the United Nations, missions. We have corporate accounts. We're in the internet. So we have our own sales and marketing team, et cetera. The Beekman was a part of Manhattan East Suite Hotels that became FETNER, which is a well-known operation here in New York. So that it has a pretty good customer base. For us, it's really to take that customer base and change it to a higher rated business. The Eastgate, sorry, same thing. Great location, 39th Street. That's going to become a Residence Inn by Marriott. The property did over 91% last year. And we get business from all the corporate demand, UN.
What about and I never brought up in all the shows that I've done on the hospitality. What about the Expedias, the hotline? How do they affect your operations as a hotel, and how do they affect when you evaluate and sell a hotel and so on?
I think the operators were a little bit slow in responding to the travel websites, but my sense is that they've gotten a hold of the situation, and they've been able to make the public aware that you can go to Expedia, but you're not going to get that much of a better rate than if you go to our website. Yeah,
in fact, we're programming or sending our data into the travel websites constantly, and typically there is a markup on those travel sites, so it is getting the same price or a better price if you just go to the hotel's website. You brought up the Gem Hotel, our new brand, the Gem Hotel, which is all about...
Trademark pending?
Trademark pending, thank you, Michael. It's all about sustainability and comfort, and we've affiliated with Clarion by choice. So they are our reservation system, which is how we're handling that.
I think in New York also you have a situation where it's a location that sells itself. If you're out in the suburbs on the side of a highway and you have a mom and pop hotel versus a Marriott product, you're going to be at a distinct disadvantage. If you have a decent physical plant and you're in Manhattan, people are going to come to Manhattan and then they're going to find a room. They're not coming to Manhattan because they want to stay at a certain
Let's get to
property.
this Manhattan. Let's talk about Harlem. I remember my own company, we were looking at a site on 125th Street and 5th Avenue. We liked the site. We were dealing with an individual who had the site. We couldn't make a deal with him. And some non-entity, literally someone who had no experience, and we were going to do exactly what you said. We were going to have the hotel and condos so we could have capitalized on both sides. A non-entity from New Jersey in the warehouse business is building a hotel. It's not really good with the community. Then a very good operator, I think you're familiar with them, are building another hotel in West Harlem. You know, this is Central Harlem, 5th Avenue, and then you have plans for others. How many hotels do you think can make it in Harlem? I mean, a Gem Hotel might be able to make it in Harlem.
A Gem Hotel might be a great fit in Harlem. You know, like I said, we like to stay at or under 200 keys. It is a good price point. We have a central reservation system with Clarion by Choice, and it's the type of hotel that could do well in a lot of submarkets in New York.
What's your thoughts about that market?
I don't know how many rooms Harlem needs or some of the other markets like Williamsburg, but the reality is that the customer, it used to be 20 years ago, all the hotel guests wanted to stay in Midtown near Broadway. Now, a lot of guests, starting with people who went to Tribeca and Soho, a lot of guests feel like a new neighborhood could be cool, fun, hip, vibrant, a nice place to stay. So you see guests seeking out the Meatpacking District, even though it's not a traditional hotel neighborhood by any stretch of the imagination. And I think Williamsburg and Harlem and even Hoboken, there's neighborhoods that have a lot of those same desirable characteristics, even if they don't have the corporate office towers.
And you're seeing the hotel companies really play to that edgy or lifestyle appeal, if you will, that Starwood has done so well with the W for 12 years?
I mean, I was planning to, on the show, wear a black jacket, black shirt, and a little earplug, and, you know, and say, which room can I get you into? But, you know, I decided not to. I kept my suspenders on. But what about, you know, people go, I mean, for my audience, Eric and Sean are like the international prominent guys who know the hospitality. When somebody comes to you and they say, I'm thinking of Harlem, or I'm thinking of Williamsburg, or even when Timmy was with Tishman, as a partner with Tishman, and you opened up on Times Square, how do you make that judgment? How do you get that feeling? I mean, even the property that you bought from Sam Chang, when Sam Chang, you know, built the Howard Johnson, they, you know, he just had nerve. I mean, but how do you have the thoughts and that a hotel's going to do well? You know, somebody looks at you, you do the appraisal, the bank is depending on it, the advisor's looking at it. You know, what magic or you know, what miraculous, the amazing Kreskin over here?
I'd say two things. One is that I think the lifestyle hotels, the boutiques, whatever you want to call them, I really think they're still in their infancy. You know, people don't wear a certain type of jeans because they need to keep their legs warm. They wear Levi's or something because it says something about the type of person they are. And more people are picking hotels because it says something about who they are. I think the other thing that you got to, it's very hard for me, I won't speak for you, Eric, but to estimate how well those hotels will do because all hotels are a combination of business and real estate. And the boutique hotels have an added layer of business where if you're Andre Balaz or Ian Schrager, maybe you get an extra 10% or 15%. But if you fall short of that level, it can mean a wide swing to the prospective profitability of the venture. So it is a little bit risky, and we struggle with that all the time, trying to pin that down.
Well, I think what's happened is that the concepts of a lifestyle hotel or boutique hotel, which were, you know, a unique food and beverage offering and a unique design, you know, from the interiors, is now being totally integrated into virtually every brand. I mean, when we're, you know, our Residence Inn that we're making on 39th Street is not at all the Marriott standard, they were extremely supportive. And if you look at all the brands, they're updating and changing their designs to be more like a lifestyle, or, you know, from what people perceive of that, because people don't want to have the cookie cutter design. And you know, you look at what we did, which was a unique design that was sophisticated to fit in with New York. Sure. So it's going to be different than what you would find at a residence in, say, at the Dallas-Fort Worth Airport, but it's going to be tied into the Marriott system, which is so powerful. And what I've seen is that lenders and investors, at the end of the day, are extremely comfortable with branded hotels from major brands.
Completely agree
and
with you.
And it's just, you know, I mean, look, independent hotels can work, and Manhattan is a market that they do work in. But you go to other cities, and you know, it's not as people aren't as confident about it.
Yeah, I don't want to age myself, but when I sat on the board of Prime Motorins Master Limited Partnership, and I was financing hotels, I could never finance a hotel if it didn't have a flag, if it didn't have a national franchise. My favorite story was Jerry Karras, who was president of Infinia Media, and with Mel Karmazon. I got a phone call once from a bank, and he owned this hotel near LaGuardia Airport. And we had a term for it, short stays. Wasn't selective stays. It was short stays, and it's still there. And I said, how can we finance it? He said, my occupancy is about 175%. My daily room rate for 3 hours is about $700. Right. And I said, you're chairman of this company. He said, that's my son's business. But it was hard, and we had to go to a balance sheet lender.
Well, I think the genius of Starwood with Barry Sternlicht and the W brand was that he exploited the uniqueness of the lifestyle hotels and the corporate marketing power of a hotel reservation network.
Well, that's exactly right. All the independent boutique hotels that are going up around Manhattan, first of all, several of them probably will fail to get out of the ground. Second of all, I think a lot of the developers and investors have probably underestimated how difficult it is to actually book rooms at a hotel. And in a raging bull market, it's
in a raging bull market, anything sells, right?
That's right. That's
but you know, these boutique, a lot of the boutique hotels, it's not. I mean, the room. I mean, just take the Gainsborough and the Meatpacking District. I mean, half of the appeal of that hotel is the lounge up on the roof. So there's the whole scene that you have to create. So some guys are successful and can create the scene that people will come to and want to be there and get the leisure business, and then other people are not going to be as successful in creating that whole scene that people want to go to. So, to me, that is, and when we looked at the Beacon, you say it's an independent hotel, but it's not. We're not banking on. We're going to have a great, I can't announce it yet, but a great food and beverage offering in the rooftop lounge with spectacular views, but it's not going to be, we're not driving the whole business of the hotel based on that, just on what, whether people are going to come for the restaurant and bar scene.
I think Tim will be on page 6.
I'm hoping.
Hotels in a general sense have become more accepted by the investment community. You always hear about the major food groups of real estate, office, industrial, retail, and multifamily residential. Hotels with greater transparency of information and more sophisticated operators, I think, have come into that fold of a major food group. And by and large, hotels are more easily financed and more often looked at by major lenders as a whole, and boutique hotels kind of as a subset of
that
hotels.
Was then, and now is now.
Right.
We have a difficult credit crisis. We're in a financial turmoil. What's going to happen with the hospitality business over the next 2 years with regard to financing, with regard to expansion?
I think it's going to be.
I mean, you're buying, you're advising, you're financing, and you're advising. What's happening?
What we've heard from virtually every lender that we've been working with is that the deals that have good sponsorship, the deals that are existing and cash flowing, in strong markets can get done. Those deals that don't fit those criteria.
Maybe I'm a little crazy. There's no cash flow if the hotel's not open. What happens in the future? We're all hoping, you know, a hotel is a restaurant. Each day it opens and each day it closes. We're talking about now. We don't have 100% financing. We don't have 75% financing. What happens?
I think if the economy gets a little bit worse, but not too much worse, there is a bit of a downturn. If the economy and the hotel industry will actually bounce back in 2 to 3 years. If there is a bigger downturn in the economy, then all bets are off, because it's a volatile business at its core.
You know, you were quoted my article last week saying that there is a little slowdown in the hospitality business.
A bit of a slowdown, but it's in New York, it's hardly statistically significant because the market's been so unbelievably robust.
Out at the Alice conference that Tim and Sean and I were at last week, which you were gracious enough to schedule this show around, we heard time and time again talk of the national market as the national market, and the New York, specifically Manhattan market, is kind of its own island, if you will.
And New York's RevPAR, which was up 13.5% in 07 over 06, something like 40% higher than the second highest market in the U.S. I mean, you know, New York City really is modern-day Rome.
As it is across, I mean, you look at the office market, the residential market, the hotel market, it's really an exception.
But I will say that, you know, in June, Somerset Properties paid $1,560 a square foot for an office building. In January, you know, Paramount Group is only paying $1,250 for a building that probably could have sold for $1,600 if it was June. Prices have gone down. There is a 10% adjustment in the office building. Has there been a 10% adjustment in the hospitality business?
Not that we've seen. Not that we've seen at all, and we're out in the market every single day. Financing has gotten a lot more difficult, but deals are still getting done.
We just had a meeting about this at our office at Cushman Wakefield yesterday, in fact, where I was talking to my counterparts on the office side and the residential side. The office guys maintain probably a 5 to 10% correction, despite the foreign money coming in. The transactions that we've seen, and we haven't seen really that many that have come through the pipeline since the credit crunch has taken hold, and even when they do come through the pipeline, virtually every transaction has its own story, so it's tough to really match up a trend. But that said, we've had meeting after meeting with foreign investors from Spain, from Germany, from all over Europe, looking for hotel product in this city.
So in summation, I think the hospitality industry is strong. I think the amateurs may have to worry a little bit, and the experienced and the good people and the people who are cautious will be good. So there's cautious optimism, very optimism in the market. I'd like to thank Eric Lewis, Tim Haskin, Sean Hennessy, and Will Abide for being here on the hospitality. I know you'll come back in a couple of months. Next week, we're going to have the economists who are really going to tell us what's happening in the market. See you next week.
Major funding for these programs is provided by grants from HSH Nordbank and First American Title Insurance Company of New York, Perfect Building Maintenance, Allied Partners, SJP Properties, Murray Hill Properties, Bank of America, GREENBERG TRAURIG, LLP. Additional funding is provided by grants from Arbor Realty Trust and Terry's Investment Partners, Athena Group, BRT Realty Trust, Burden LLP, City Habitats, City Investment Fund, Cushman & Wakefield, Eastern Consolidated, Essex Capital Partners, Herbert J. Sims & Company, Herrick Feinstein LLP, Helmsley Spear, Jackson Development Group, James D. Kuhn Real Estate Institute at Syracuse University, Kilroy Metal Products, Massey Knackle Realty Services, M&T Bank, Meridian Capital Group, McSam Hotel Group, Newmark Knight Frank, Moinian Organization, Must Development, Palin Enterprises, Rosenthal & Rosenthal, Signature Bank, SIDNEY FETNER Associates, Sutphin Properties, Stonehenge Partners, Studley, Triangle Services, WITKOFF Group, Extreme Contracting and Deconstruction.